So the FOMC meeting has officially kicked off, with tomorrow going to be the anticipated interest rate hike. Bitcoin has started to pull back after initially getting excited on Sunday and running up to that $24,000 mark. How is the price action responding? Because you can see here Bitcoin's having a green day, up 1% today, trying to bounce from a key level. In this video, I'm going to break down exactly which altcoins I'm going to be buying the dip on if we get an FOMC opportunity. Smash the likes. Don't forget to subscribe. As always, check out the links in the description if you wanted to buy or trade any cryptocurrencies. I personally use BYBIT and BITGET to do all my trading with. But you can see here we broke out, got thrown straight back into the downside, broke out again, this time a bit more gradually, but still on Sunday here as we run up toward 24,000, we created just a slight higher high and then got thrown back down to the downside. A really painful day yesterday, pretty much taking us down from this 24,000 level all the way down, wicking down to lows on this candle yesterday of 22,500. Now, interestingly, we've seen important support coming in from this level. Look at where we bounced, right at the bottom of this support. This is now the fifth time we've almost bounced off this key level, and it's very important that we hold this level on Bitcoin. Remember, I said if we lose this level, we could be seeing a serious retracement. What you've just seen here, guys, is nothing. There's no reason to panic whatsoever. This is just a fake out, right? We're in a nice move to the upside, we faked out, and we got thrown back to the downside. Right? That's nothing to be worried about. A pullback is when you really start giving up some of the gains which you've just had, which we've not shown any risk of doing yet. We've not even come down here to test this level of support and resistance which we built on our first way up, where we first consolidated. So all the panic in the market is completely unnecessary, but we do have to look to the FOMC meeting tomorrow. Because if Jerome Powell plays it out in a certain manner, which I'm going to go through, we could be seeing a buying opportunity. Now, looking at the markets today, the markets are still quite buoyant, right? Is this just a little bit of front? Is this just a bit of overconfidence going into Jerome Powell's meeting? And if that's so, maybe we won't see this pullback. But I've got a game plan that if we see this pullback, I know exactly what I'm doing. I'm going to be sharing that with you in this video. Now, in order to understand what do I mean by an actual pullback, we've got to zoom out to the weekly. I'm going to clean off these lines for you guys and just pop on my EMA ribbon. Again, if you don't know how all this stuff works, if you want to know how to get this access to this EMA ribbon, ijaz.uk/TA. In that free course, I walk you through everything. All the indicators I use, how I use them, what they mean. That way you'll be able to follow along. Now, on this daily chart, a pullback for me is when you zoom out like this and say, okay, what is a pullback? Yesterday is not a pullback. Yes, it's not great, right? Yes, it's a bearish engulfing candle as well. But a real pullback brings us down in these kinds of levels, right? 21,000, 21,500, that's a proper pullback. So if we see real red candle sticking, a couple of red days here this week after FOMC meeting, I'll be ready to buy the dip in this kind of an area, okay? That's where I'm looking for some opportunities to buy the dip. Now, of course, if we manage to flip our EMA ribbon bearish again and the bear shows some real strength and manage to push us back down to the downside even further than that, then I'll be looking to load even more powerfully. Now, the question here is, if I think the price is going to go down, why would I be so desperate to buy the dip? Well, you've got to understand, this is not just me. I think the whole market now understands that we are fundamentally in a very different position to where we were last year. Guys, quick story. So the other day, I got a message from one of my team members, and it turned out he got caught up in a phishing attack. Yes, these phishing attacks are getting more and more sophisticated, whereby the attackers are able to pretend they are a senior person in a company and request payment from somebody else. On top of that, I got another email from one of our IT guys who said I need to change all my passwords because they've been leaked on the dark web. This is a complete pain, and that is why today I'm proud to partner with Aura. Aura is an easy to use app which gives you everything you need to stay safe online. Aura protects you from scammers and hackers by scanning the dark web, where criminals sell stolen information, looking for your emails, your passwords, and your social security numbers. It then alerts you fast if it finds anything. Aura also gives you near real-time alerts on suspicious credit inquiries, like if someone was opening a loan or a credit agreement in your name. Their built-in VPN also allows you to stay anonymous online by keeping your browsing history and personal information safe and encrypted. Aura even helps you manage what your kids can do on their devices as well, so you can restrict specific apps, set screen time limits, and you can even set focus times to ensure your children are doing their homework instead instead of binging on my videos on YouTube. And not to forget, their password manager also lets you store and access all your passwords in one place. Now here's the thing, maybe you've got an app or two that does some of these things. The beauty with Aura, and what I specifically like about it, is that they've managed to bundle all of these into one place. So you just need Aura and it'll take care of all your online phishing, scamming, and VPN needs. So let Aura do the hard work of keeping you safe online, and we've got a 14-day free trial for you and up to 60% off on the subscriptions. Definitely head over to my link, ijaz.uk/Aura to take advantage of that. And let's get straight back into the video. Over the last few videos when I've been talking about the crypto markets, I've explained that there's a clear reason why risk is starting to rotate on. And that's because fundamentally we're in a different place to where we were last year. Last year was a completely different environment. So now you're seeing that the market will feel a lot more confident to buy the dip, and this could sustain us for more powerful moves to come. Now, the bears will also notice this, so expect a lot of volatility. What did I say when we turned to the new year here on 2023? Expect volatility in Q1, Q2. The bears who have dominated this trend throughout 2023, those who have been brainwashed to think Bitcoin can only go in one direction, they're not just going to give up and say, okay, bulls, you win. There are going to be some key battles at key levels. They're going to push the price back down. The bulls will have to show their strength. The bears will come back in, and there's going to be a bit of to and fro. There's going to be a tug of war. So it's silly to think we're just going to drive all the way back down to 15,500. It's also silly to think we're just going to run straight into our next bull market. There's going to be attrition in between, and we need to prepare ourselves. But one thing I know for sure, I'm ready to buy the dip on those projects which maybe I didn't get enough chance to top up on, and that's what I'm going to break down with you here. First and foremost, I always have to eat my vegetables, right? If you guys are in our private member live streams, ijaz.uk/member, you can cancel anytime. What you'll understand is I always say I have to eat my vegetables. I get excited with altcoins just like you guys. The return on altcoins are always so much more exciting, but I'm going to have to nibble a little bit more Bitcoin and Ethereum if Bitcoin comes down into its EMA ribbon here. Now for Ethereum, the interesting levels for me on the chart are similar, right? Will it come in deep into its EMA ribbon? Will we get these 1400 prices? If I bring out my horizontal lines, you can see I've got an important support line right at the bottom of the EMA ribbon at 1415 on Ethereum, okay, 1400. So if we see these kinds of levels, even as we head towards this green line, I will be topping up a little bit of Ethereum as well. That way I've eaten my veg. Then I'll be looking at things like Phantom. You know, I always have to control my urge to buy some Phantom. If we get a significant pullback, this pullback would have to be bigger than some of the others because Phantom's been on an absolute tear here, and I have been fortunate enough to add a lot at around that 15-cent mark. So I'm not desperate to chase this whatsoever. If we get a meaningful pullback, I mean, if we fall sub 38, if we come into the CMA ribbon, 33, 34, we may never see these levels, but if we do have a significant enough pullback, I'll be looking to top up some Phantom as well. Again, I've got to be very careful on this one. Yes, it's now sitting at a $1.3, $1.4 billion market cap. It's still smaller compared to some of the other plays, and therefore I cannot let it become too big a part of my portfolio. Polygon Matic, not one I'm actively going to be chasing again, partially because I've got a portfolio I'm happy with, but this is one, this is part of psychology, and this is an important message I want to share with you guys as well. Even when you've managed to top up your portfolio, sometimes you get caught in this cognitive dissonance. And what happens is, let's use Phantom as an example. If I've had the privilege of buying Phantom at 15 cents or buying Bitcoin at 15,500, it becomes incrementally more difficult for me to buy as the price gets higher. But if your thesis is that Bitcoin is going to go to 100,000, if it's that it's going to go to 150,000, or whatever your price target is over the long run for Bitcoin, does it make financial sense for you? And again, this is not financial advice. Does it make sense for you to be still buying in the 20s, 25, 30, 35, if your end goal is Bitcoin's going to get to 100,000? And that's the bit you struggle with from a psychology perspective. So it's really important for me, and I'm reminding myself first and foremost, that I continue to try to dollar cost average in, even when the price gets a little bit frothy, and that's difficult. So Polygon Matic, something I know is a blue chip. I've been dollar cost averaging in for many years. I have got it at much cheaper prices than it's sitting at now, but still 110 when I look at it, and I look at the great scheme of where I think this is heading, I've got to remind myself that this is the journey of Polygon Matic. Right? This is where we're at right now. And if I look at this on the Fibonacci retracement, I've made a separate video on Polygon, which you can go watch. But even just getting to the 0.618 golden pocket is a $2 Polygon Matic. So buying now, I'm almost doubling my money, right? So I've got to remind myself, even when the price goes. So another one for me to look at. I've mentioned in my other video, layer 2 solutions, okay? So the likes of Optimism, the likes of Mina Protocol, the likes of course of Matic, which we're just covering off here. I will be looking at them case by case and seeing, is there an opportunity for me to add the dip? Now, there are some considerations in those specific 2 projects, which I break down, including the tokenomics, which can be a concern. But again, I do want exposure to that narrative. That narrative is not going to go anywhere, that layer 2 narrative. Yes, there could be some issues with the tokenomics, but I still need some exposure to the layer 2 scaling solutions for Ethereum as well. Also worth a mention is the COTI and Cardano ecosystem. So we know this week is supposed to be really big with the launch of the JED stablecoin. We've been speaking about this for a very long time, dating back to last year. We were speaking a long time about this JED token, and finally it is expected to be launched this week. So let's look out for updates on COTI. COTI up 3% today. Again, remember that stable coin has benefits for Cardano as well. Both coins which I like to add. And again, I think of them as similar, right? So if I was going to allocate a position to Cardano, whatever my percentage is for Cardano, I just allocate a very tiny portion of that to COTI. So I treat them as very correlated plays, and my COTI position is not huge, right? It's just a little bit of exposure to that project because I like what they're working on. The other projects I'm looking to make sure I've got enough of in my portfolio are the decentralized exchanges, or the DEXs. So again, I spoke about in my narratives for 2023. If you've not watched that video, I'll link that up for you guys here. That decentralization is going to continue to be an important narrative. What do we learn from 2022? All these centralized plays let us down. So I expect a strong year, particularly this year and going into our next bull market next year as well, for decentralized plays to continue to show some good growth. And for that, I'm looking at things like Uniswap. You can see here where it's sitting currently on Uniswap, $6.57. Still crazy, right? If you get up to its Fibonacci golden pocket up here, you're looking at $29, $30 here. Just to retrace back to here, not even to get to all-time highs on something like Uniswap, which is giving you a 5x ROI. Similarly, something like CakeSwap, you can see here we're sitting at $4. Getting back to your Fibonacci ratio brings you to $31, which is an impressive 7+x on that as well. So those are the other projects I'm looking to add actively into the portfolio. Now, it's important to understand tomorrow the markets are expecting 25 basis points. So if we get 25 basis points, the markets will be happy, but they're not going to be delighted. Don't expect a crazy 5, 6, 7% day tomorrow if we just get 25 basis points. The market will quickly then switch its focus to Jerome Powell's press conference to see if he gives us more hawking or less hawking than the previous meeting. I personally think he's going to come out with a slight hawkish bias, but I don't think he's going to over-egg it too much. I think he's going to keep his foot firmly on the market's neck to remind us that we still got work to do. We still need to bring inflation down. We do not want financial situation to over-tighten. We're still hovering on the brink of a recession, right? He'll say things like this just to remind us that we're not out of it. Even though the GDP print showed 2.9%, remember, in their summary of economic projections for 2023, they're expecting 0.5% growth in GDP. So hovering on the line of recession, right? So he's probably going to further iterate that. He's probably going to touch upon the fact that he expects unemployment to get closer to that 5% mark this year as well. Just to remind the market that we've got some work. Get back in your box. Don't get too excited because the stock market has had its best, the S&P has had its best January since 2019. So it's absolutely insane right now. Big month here on crypto and in the traditional markets. And the markets are starting to feel this rotation is upon us and we're ready to start turning risk on. So we've got to play this very carefully tomorrow. Tomorrow we will be covering it off live. Make sure you subscribe. Make sure you got the notification bell on. We will be live streaming the interest rate decision plus the press conference, which is where we expect the markets to move. Remember, on Thursday, you have major players like Microsoft, Amazon, Google producing earnings as well. So this week is set to be a volatile one. If we see that volatility, if I see that serious pullback, not the hourly pullback where everybody panics, a real pullback on the daily chart towards that daily EMA ribbon, then I'll be looking out to take out my wallet, make some purchases, and make sure I've got those positions topped up. Let me know, what are you guys doing? What are your plans here in this market? Let me know in the comments below. Don't forget to smash up likes. Don't forget to subscribe. Check out this video here, and I'll see you in the next one.